In this video, it's time to talk about momentum. Momentum plays a part in a few different ways in the markets, and it's quite an understated method. It doesn't come into really the analysis process, but more so it helps with actually building an eye for the markets and getting a good idea of when it's a good idea to actually get into a trade, when it's a good idea to stay out of a trade, and also to help you understand who's in control in that battle between buyers and sellers. So the first way that we can use momentum, if we just look at this diagram here, is by gauging how strong the buying and selling is in the market. This method can actually be used to identify whether or not a downtrend or an uptrend is likely to continue, or if it may be getting to a reversal point. What we can see here is basically a slow sideways movement and then a very sharp drop off. Then we have a slow sideways movement all the way back up, and then another very sharp drop off. This shows us that there is a lot of momentum to the downside and much less momentum to the upside. If we look, for example, this move down here could maybe take, one single day, but then the run back up is going to take 5 days or 6 days to actually complete. Okay, so what that tells us is there are a lot more sellers in the market and there's a lot more selling pressure than there is buying pressure, because the market can drive down so quickly due to all the selling, and there's not really that much demand because the buying is very, very slow. We can tell that there isn't much demand because there isn't obviously large fast movements moving back up. So what this tells me is, well, let's say I was looking for a short from this area. I may be good to actually sell back into that with more confidence, okay? Because I can see there's so much selling pressure in this market, and also I can see that this area that the momentum came from is a very strong selling zone. Therefore, when we retest it, especially with how slow the momentum is pulling back up, I can already see the sellers are in control, and I could happily sell there with a little bit more confidence, knowing that we are really in control on the selling side and not the buying side. Now, on the flip side of that, if I was looking for a reversal trade to occur in here and I saw this very slow sideways grinding action, I would make sure to stay out until I saw momentum pick up. So if we were watching this structure point here, we may be looking for example for the market to make a slow drive back up and over that price. But I would want to see some real momentum come in like this before I actually started buying, because I can see here that the selling pressure is strong, the buying pressure is weak. And if we only just rock over the top there like this, then I'm not really going to want to buy in at this point, because I can already see that there isn't much momentum in this market. And with the amount of selling pressure that came in, even though we've just about swept a high, it's very possible that more selling pressure comes in at this level and the market dumps. So we can actually use momentum to gauge how strong the market is, or how strong the sellers or buyers are in a specific market, and then we can trade with them. And this uses like higher time frame momentum, just an overall view of the market when we look at the charts. So we'll have a look in a moment, but first of all, I want to show you the other use of momentum, which is more commonly used and more relevant to everyday trading. So we can see here one of those reversal patterns that we talk about. Let's say we are in a downtrend, we see the downtrend coming in. The downtrend then slows down here, pushes into the final lower low, and then we have this strong momentum, very bullish higher high. This is a really good use of momentum and really, really useful to actually help us build confidence and guide us in whether we are buying in a good location. So if we see this downtrend coming to a close around this area with very slow momentum, that tells us that the sellers that were in the market are actually leaving the market. The market is actually struggling to make lower lows and is not moving fast anymore. Now, obviously, that's not enough because we could just continue grinding slowly down. But when we get a large bullish momentum move like this, a very large impulsive bullish move, that shows us that there is now a lot of momentum in the market. And that gives us confidence to actually focus on the demand zone that broke structure for our buys. So remember, momentum is best used to gauge the strength of a market and also to find reversal points. If we see the momentum stagnating as we approach a high interest zone on higher timeframes, or even on the low timeframes, that shows us that the selling or the buying is finishing. Okay, in a bullish example like this, seeing the momentum go from strong to very sideways and choppy shows us that we are losing that momentum. And when we see a strong bearish impulse like this going in the opposite direction and breaking a few structure points, that shows us that there is a lot of strength on the selling side. Even better is a slow grind back up to the supply zone, right? If we get this kind of slow, low momentum movement after a large bearish impulse at a reversal point, that shows us that the market is very quickly reversing and struggling to make ground back up. And then when we trade into that point, we get a large sell-off once again with the strong momentum, and that is the point that we would be looking to sell from. So as you can see, it is not so much something we will, be using systematically, but being able to eye the momentum and see how strong or how weak momentum is in a market is a very valuable thing to know. So we're going to head over to the live charts now, and I'll show you a couple of examples of momentum in live charts. In both of the examples I showed you, in a reversal situation like this, and also in a longer time frame continuation setting as well. Here's an example of the larger time frame and the larger view momentum in the market. We can see on USD CAD that we had a fast sell-off and then a slow grinding upwards move to fill this imbalance space. Price came into this level, which is a weekly supply zone, but not a daily supply zone, so to speak. The daily would be in the top. And then when we tap that level, we sold off quickly again. We can obviously see from this that the momentum to the downside is very strong. First of all, we had a little break of structure at this point. That was the first notable break of structure. And then after that, the pullback to fill this imbalance space took so long compared to the drop-off that kind of tells us the momentum in this market is bearish. Okay, we have a lot of selling pressure, and then we have slow sideways action. So when we approach this point again, we may get another fast sell-off. And as you can see, that is exactly what happened. So just gauging the overall idea of the market and seeing, okay, the selling pressure is really strong, the buying pressure is pretty weak on the way back up, we can then gauge that selling again is going to be a nice profitable movement and will likely bring the market down quite a lot. And as you can see, it did that again, breaking into the structure point. Then momentum started dying out. So we could say if the market slowly pulls back up into this area, we may have another brilliant selling opportunity in line with, first of all, the structure and also in line with how strong this bearish momentum is. The other way that we use momentum is to gauge the strength of a breakout or a change in trend. If we look at this example on the chart on Euro USD, what we've seen is a very strong bearish downside move, and then it started to stall out at this area, and the momentum actually died out. We stopped seeing these strong downside moves, and we actually saw this quite sideways, choppy action. We then had one final push down, and that traded it into a demand zone, and from there, we had a small consolidation, and then a huge burst to the upside. So this huge burst to the upside is obviously an impulse. The reason being, if we look at the previous structure, lower low, lower high, lower low, lower high, and so on, it has now all been swept out by this push up. So if we just mark on some of the breaks of structure real quick, we can see here that we've had a break. We've also had breaks of the previous structure as well, around this level, and then these other two levels as well. So this here is a strong momentum move. We can see that after we accumulated in this area, there was a huge push in momentum, a very strong move, which broke 1, 2, 3, 4, 5 structure points. And that shows us that we can be happily buying into this now because the momentum is so strong in this trend that it's managed to push through multiple structure points. So what we can now do is look towards a demand zone in the low of this movement. And then when the market comes into that area, we could rebuy and we could take the market higher with confidence because we've seen such a strong burst out of this demand zone. So we want to use the momentum in line with other things. Obviously, in this instance, is the fact that we traded it into a demand zone and then we broke through loads of structure points. So we're using supply and demand and structure in line with the momentum. And seeing such a strong momentum move gives us the confidence that when we pull back, we can actually start buying and we are likely to get a slow grind down and then another strong impulsive move. So what we would not like to see is a breakout with very low momentum. So if we saw price very slowly grinding sideways upwards, pushing over this structure point or this structure point, we wouldn't have so much confidence because it shows us that there isn't a lot of buying pressure. But it's the strength of this move that really fulfills that for us because we've seen such strength in this movement that we could happily then look to buy back in to expect that we're going to get a shift in this trend. We're getting a shift from the downside to the upside, and we are likely to get another high momentum move. So if we actually just look at some of the previous ideas like this, we can actually see that it's formed quite a few times. Now, we've looked at this setup on a couple of occasions. If we just look at it again in terms of the momentum aspect, we can see at this area we had large selling pressure. Okay, large selling pressure down, slow grind back up. So as soon as we fulfill that supply zone again, we sell off very, very quickly because there's a lot of selling pressure. And we know that from these strong downside moves and the fact that the upside moves are very slow sideways grinding action. So when we have strong downside move and weak upside move, we know that when we hit a sell area, we are likely to sell off quite quickly. And on the flip side, now that we've actually got this kind of reversal in play, when we are seeing slow grinding downside movement and a strong impulsive upside move, that tells us that the next trade that we could get could be a strong impulsive buy. And that is how we use momentum in line with all the other aspects in our trading.